But the basic
Yeah.
story that we are still in a growth regime continues even in the second half of this year. Now, for example, starting this month, we're going to start seeing results come out in the US, and they're going to be blockbuster. So I actually think that you're still going to see markets go up, but volatility in markets increase.
And that brings about some rationality on valuations as well, because if you just look at price to earnings, the earnings momentum kind of justifies the price move for the markets. I just want to understand how much of the rate risk and the taxation risk is priced into those earnings, or would that be a major reset and jolt for the markets as and when those risks come to the fore?
I think the rate is the bigger thing to worry about. In a sense, that's because that can prolong itself for a while. It has implications from how bond markets react. It has an implication for cost of capital. It has liquidity implications. It has quality implications. Taxation, I wouldn't worry about so much. I think it's a blip. The market adjusts pretty quickly and moves on. So I'm not that worried about taxation. Again, taxation, there will still be ways and means by which the implementation is going to be diluted as against being a full impact. So I think both these risks are true, and rates is what we would keep focusing on to see if there are any policy changes, policy mistakes. Those are the things to constantly watch. And I said that's the reason why the second half is going to be more tricky than the first, and even possibly even to next year. And this is something that we have to live with.
Yeah, Bhaskar, it makes me wonder. I mean, if you're looking for additional gains in the second half, if you look to some of the underperformers, I mean, regionally we think of mainland and China. And do you think there is potential here to play catch up? As you probably heard, we were talking about the data pointing to some slowdown on the factory side.
Absolutely, Nancy. I think China clearly stands out as an opportunity for the second half. And the reason I'm saying that is, between February and now, we've seen an underperformance out of China for no reason, apart from sort of, I would say, it's a bit of self-induced regulatory environment, bit of oversight. These things have caused markets to be a bit more nervous. The underlying fundamental story in each of these companies that have constituted the index that have caused us underperformance are actually very positive. And I think you're going to continue seeing that in the second half. So I think the big catch-up story for the second half is China. And therefore, I think both the renminbi and China will do reasonably well in the second half. While, again, in general, we think the dollar strength is coming back in the second half too against most other currencies.